Okay, so after the carnage of yesterday, where $1.4 trillion was wiped out of the US market or out of the S&P 500, today is actually the exact opposite. We've got everything green. Even in Japan, where all the carnage began, we had one point in the day where they were 8.08% up. When it comes to the NASDAQ is about to open. The futures are ever so slightly up, but I guess we should still celebrate that they're up. I guess the big question today is whether or not this was the beginning of something, or this was the entire entity of the collapse. So I guess everyone's asking whether this recovery is a trap or whether this is just a little trap up and then we're going to continue to go down. Also, look, I don't know about you, but when I looked at my portfolio this morning or last night, I'd lost a lot of money. I lost a fortune. I think you guys can see the number. And I'm going to show you what I'm going to be doing from today to actually make that money back. So today is going to be talking about whether this is a trap. And for those of you who landed up losing money, I'm going to show you what my plan is to make back the money that I lost yesterday. And let me tell you, the number's big. I don't even want to mention it. That's how big it is. So let's get going, guys. Listen, OG banter, bro. Your comment wins the funniest comment ever. Nice shirt. I want your washing powder brand. That is a 10 out of 10 comment. That is a 10 out of 10 comment, bro. 10 out of 10 comment. Josh, people are loving the white shirt. Josh hates the white shirt because it blends into the background. Anyway, as you can see, today we're all smiles after yesterday, which was very, very much not smiles. Let me know in the chat right now how much money you think my portfolio lost yesterday. How much money do you think my portfolio went down yesterday? Because later on in the show today, I'm going to show you what my plan is. I'll tell you how much I went down, and I'll show you what my plan is to actually make that money back. Also, I think we have to answer the big question of the day, and that is this one of those traps where you get a big leg down, like every other correction, or every other real correction? You get a day of panic, but then you get a recovery, and then you get the continuation of the downturn. That is how every panic actually happens. And that's why I guess the big question is, do we actually trust this bounce that's actually happening right now? I mean, just look at this. Brett is up 52%. Ondo is up 36%. You've got Bitcoin up 11%. So do we trust this bounce, or is this just the last opportunity to sell before the carnage continues? Because the carnage could continue. That's what we're going to be addressing today. So listen, fam, if you are not already subscribed to this channel, then what the hell are you waiting for? You need to join the white page over here, which has been washed with the white shirt. I wonder why it's not working. Join the 963,744 subscribers. If you are already subscribed, do me a favor. Just smash that like button. I see we've already got 500 likes. We need a lot more likes if we're going to get this show out to the masses. Yesterday's show, because of you guys, over 100,000 views. If you add up the Twitter views and the YouTube views. Saturday's show, over 110,000 views. So as a family, we're doing very well. We're growing. Anyway, let me bring you the alpha, as I promised you guys I would. I trust that you guys will smash the like button. It's just one of those things. It's like a trust relationship. I will give you the alpha, and you will smash the like button. The more you smash the like button, the more alpha will be coming out here. So that's yesterday. Yesterday, the S&P closed 3% down. 1.4 trillion was wiped in the S&P. As I mentioned to you yesterday, it wasn't such big carnage. I mean, people were expecting a market meltdown. I made a prediction. I said, look, there's not going to be a market meltdown. The NASDAQ's going to close down less than 2.5%. I was slightly off. I think the NASDAQ closed down like 2.6 or 2.7%. But I predicted that when the markets were down 6% in the morning. And I said, this thing's going to recover. And it did recover. Today's the exact opposite, as you can see, specifically in crypto. Have a look here. You got TAR up 41%. You got Brett up 52%. Big tokens like Lido up 24%. Casper up 30%. I don't know if you guys saw, but Casper actually hit 12 cents yesterday, which was absolutely crazy. Excuse me. So, Colombian flu. You got Render. up 31.25%, Rune up 20%. It's a very different picture from where we were yesterday. And if you look at Japan, even Japan was up at 1.808% and was actually up for the week at one point. As it stands right now, as the Nikkei closed, you can see that it's pretty flat. It's pretty flat. It made up all this space yesterday, and now it's pretty flat. In terms of the S&P, the volatility index, the VIX, which went up to about 65, which is the same level of COVID. This is the volatility index. It kind of measures the fear of the volatility in the market. This VIX is now back down to 30. So it feels the exact opposite of yesterday. Yesterday was carnage. Yesterday was bad. Today, much more relaxed. You have the NASDAQ, which I think is just opened. It's up 0.41% from yesterday. Let's quickly look at the heat map. NVIDIA is up 4.18%. Microsoft is up. Google slightly down. So it feels like the carnage is over and it's calm again. And it's time for us to take stock of what actually happened. So what actually happened? Well, on the NASDAQ or on the S&P 500, $1.4 trillion was wiped off, closing down 3%. In crypto, some interesting statistics for you from yesterday. 155,377 traders were liquidated. 573 million liquidated across all traders. $300 billion wiped out across total market cap. Bitcoin went to 49,000. ETH went to 2,115. Nikkei was down 12%. S&P was down 3%. So if you survived yesterday, congratulations. That was absolutely amazing. You can see that Bitcoin is now back up at 55,000. We'll talk about where it's going in a couple of seconds. I did like this tweet from James Van Straten where he says, Bitcoin will finish roughly 6% down on its worst day of the year. It was down as much as 16% at one point, which would have been historically abnormal, but which would have been historically normal. Now, we can see that we are down. We did close down minus 6%. So all in all, the carnage wasn't as much as bad as the carnage could have been. And luckily, I actually did predict that. And I think that for those who took heed yesterday and actually started DCAing, you probably got yourself a good deal. But I guess the big question on everyone's mind is, what is the washing powder that is used to wash this beautiful white shirt? I mean, is that not the question on everybody's mind? No. The question on everybody's mind right now is, was that the beginning, or was that the beginning and the end of the problem? Because Arthur Hayes, who is well respected, he says that was the first wave. Now we wait for the bodies of TradFi over-leveraged Muppets to surface. Then wave 2 begins. If there's going to be a bailout, the market needs to deliver more pain by Friday. Enjoy the respite, for the war shall continue. And Michael Gade and Jim Cramer, I don't really agree with Jim Cramer very often, but in this case, I do agree with him. He says, feels done, but historically the big sell-off does not lead to a one-day big sell-off does not lead to a bottom. Should be more to come after this bounce. And I don't really agree with Jim Cramer normally, but this time I actually agree with him. Normally, when you have these catastrophes, you have a little bit of, you have a down, you have a bit of a recovery, and then the people realize that the problem hasn't even gone away, and so we continue to go down. Michael Gade says, they will turn everything bullish again very quickly and hit it again afterwards. I will not relent. If you want to, I wonder if I should show them a very funny interaction. Let me see if I can quickly call it up for you guys. I asked Michael Gade to come on the show yesterday, and he said, no, you can't really see it. I asked Michael Gade to come on the show yesterday. He said, no, I've been utterly slandered. I said, you were too busy claiming clout, because he was, the whole day, he was just tweeting about how right he was and retweeting people and whatever else. So I guess, as I said, I do agree with Jim Cramer. And what you can see is that in Japan, the Japanese authorities are holding emergency meetings to discuss international markets. Now, that's a great headline. But I don't expect them all of a sudden to go, oh my goodness, the Nikkei, our currency strengthened and the Nikkei collapsed. Therefore, we should go back on our decision to increase interest rates by 0.25%. I can't see it happening. So yes, they're probably having discussions, but I can't see them reversing this trade. I'm also pretty happy, not pretty happy, but also as I forecast yesterday, I did forecast that the Fed is not going to call any emergency meetings. There were rumors all over Twitter saying the Fed is going to cause emergency meetings, they call an emergency meeting and they're going to reduce interest rates. Now, if anybody did that, as I said to you yesterday, I think they are engagement farming. Why do I think that they're engagement farming? Because the truth is the Fed is watching the overall state of markets. They're not watching one day in the markets and going, oh my goodness, the markets crashed for one day. And by the way, even after the markets crashed in that day, you have the NASDAQ only down 8% from its all-time high. The Fed is not sitting there going, oh my goodness, we're going to come back from our vacation to have an emergency meeting because we had one bad day on the markets. And right now, as Arthur Hayes says, unless we get another wave down, then we can say that nothing is systematically broken. So for as long as nothing is systematically broken, and right now it's not systematically broken, when you have one bad day in a market, or maybe one bad week in a market, and the market corrects a couple of percent, but the market is still up. Yeah, let's just quickly look at the NASDAQ, the QQQ. We can look at the QQQ. I think it's just an easier, more elegant way of doing things. So when you look at the NASDAQ over here, you can see that, if you look at it from last year, November, because I think that's a good place to start, you can still see that the NASDAQ is up 23.28%. I don't think that the Fed officials are sitting in their vacations and going, well, we need to come back from vacation right now so that we can have an emergency rate cuts because some sissies were over leveraged in the market and now the market changed dynamics. It's not going to happen. So I'm glad to see that prediction of mine came true. Other prediction I said is the market won't melt down. So this prediction came true. Number 3 came through. This so far so good. This prediction over here that we will close down minus 2.5%. I hope you can give it to me. I think we closed down negative 2.68%. I hope that they can actually give it to me. I mean, are you giving it to me? I said 2.5. It closed down 2.68.
Yeah.
Yeah.
I'm gonna give the information on Monday. You ask for it on Monday.
Amazing. Okay, so long story short, that's where we are. Now, look, I think that last night, one of my friends texted me, and I'm going to show you the text exchange because I believe that you should see the text. He said, it's a good day, bro. And I just replied, yep, I agree with you. I think that yesterday was actually a good day for markets. Now, you may say, how do you say it was a good day for markets? 1.4 trillion was wiped out, Bitcoin crashed, etc., etc. Long story short, I think that yesterday we cemented the rate cuts. Because up until yesterday, Powell could have relied on data and he could have said, look, remember there are inflation numbers which are coming out on the 14th of August, which is next week. And Powell could have come out, up until yesterday, Powell could have come out and you know what he could have said? He could have said, the inflation numbers are bad and we're not actually going to reduce interest rates. But yesterday, and what happened yesterday, I think it would be negligent of the Fed not to actually start reducing rates. And as you can see, the market's predicting, more sober than yesterday, a 74.5% chance of a double rate cut and a 25.5% chance of a single rate cut. But that means that there is 100% chance of rate cuts. So there's 100% chance of rate cuts. So one of the good things for yesterday was the fact that we cemented the rate cuts. And if you look at where the rate cuts actually are, it's over here. If it actually works. I wish that the internet was as effective as the washing powder. So we're looking at a double rate cut here, a single rate cut here, and a single rate cut here. So the market sobered up a little bit, and now they're talking about effectively 4 rate cuts this year. So that's the first good thing that actually happened yesterday, and that's the first of many good things that actually happened yesterday. Let me show you some other good things that happened yesterday. Second thing that happened yesterday is whilst the traditional markets, TradFi, was implementing circuit breakers. Now, you know what circuit breakers are. Circuit breakers are when the market stops you from trading because the market's moving too far up or too far down. Yesterday, when the market was going too far down, the markets halted. Today, when the markets were going too far up, the markets halted. So whilst the TradFi was implementing circuit breakers and you couldn't get into your favorite website, you couldn't get into Charles Schwab, Fidelity, Vanguard, Ameritrade, well, crypto was unaffected, guys. Aave worked exactly as planned. Athena. Now, the reason why I'm so impressed with Athena is because nothing like Athena has ever existed. This is the first real global market stress test for Athena itself. And look at Athena. Athena held its peg across the board, which means that DeFi worked without a hiccup in what was one of the worst days it was a day that was, in the last 100 years, one of the worst days that markets have ever seen. And DeFi just carried on working perfectly. The third thing that excited me is that BlackRock, not a single Bitcoin left the BlackRock wallet yesterday. In fact, both Bitcoin and Ethereum ETFs had positive inflows yesterday. Now, I don't know about you, but I predicted yesterday that we would get a sell-off out of the Bitcoin and Ethereum ETFs. We got net inflows into both Bitcoin and Ethereum. And actually, we got more inflows into the Ethereum ETF than we got into the Bitcoin ETF. But I don't know about you. That for me is one of the most incredible things that actually happened in the market yesterday. And it looks like we actually are moving into wave 2. Wave 2 is when the institutions actually start buying Bitcoin and start recommending Bitcoin. And yesterday, we had a lot of big institutions actually disclose that they actually are holding a lot. So Semler Scientific buys another 6 million Bitcoin and raises to buy another 150 million Bitcoin. Europe's fourth largest hedge fund, 𝗕𝗬𝗕𝗓 Management, discloses 500 million in spot Bitcoin ETF holdings. That's another thing which happened. Then the other thing which happened yesterday is that all the CME gaps are filled. So every single one of those CME gaps are filled. So, I mean, if you just look at the track record of how good yesterday was, 1, we cemented the rate cuts. 2, DeFi worked as planned. 3, the ETF didn't sell. 4, the funds disclosed that they actually are buying. 5, we filled the CME gap. 6, we could be getting a short squeeze because yesterday a lot of people actually went short. And you can see that we do have a whole lot of people that went short yesterday. And typically when people go short, we could get a short squeeze. 7, we wiped out the leverage. Look at this. 50% of the leverage was wiped out yesterday. So we started the day at an open interest of 46 billion and we went down to 30 billion. That's 15 billion wiped off the operating leverage. We also reset the fear and greed. And to be honest, I had to go and see this for myself. The fear and greed is at 17. We know historically what happens when the fear reaches the bottom. That is when it's the best time to be buying. And right now, we are in extreme fear again, which we haven't been in extreme fear again for the first time, for a long time. What I can see here is that we are at extreme fear, but we are above $50,000. In fact, we are above $55,000. So that for me is all the good things that happened yesterday. So it was a terrible day. My portfolio bled. You haven't told me in the comments how much you think I lost in my portfolio, but let me know in the comments. It was a very, very, very bad day yesterday. But there were, as I say, 7 or 8 or 9 really good things that actually happened in the portfolio, in the market. Okay, so now it's decision time. Decision time for you. And, yesterday was a very scary day, but now it's time to actually make some really big decisions. And the first real decision that you have to make is whether you are a good investor or whether you are a bad investor. Yesterday was the test as to whether you are a good investor or a bad investor. Because if you were one of these people yesterday, short-term holders puked out so many coins that they locked in at losses similar to the scale when FTX collapsed. First of all, if you were one of those people who were selling coins yesterday, let's just put it this way. If you weren't hodling or buying and you were selling, then you're not a real investor. And you got to make a decision as to whether you're a real investor or whether you're a paper hands retail investor. Because yesterday is the day that it's easy to be an investor when markets are flat and when markets are up. But you got to make a decision when markets are panicking down. If you were buying yesterday, and I'm not going to put you on the spot. I'm not going to make you admit it, but you know who you are. If you bought yesterday, you're a 𝗥𝗬𝗕𝗥 investor. If you did nothing yesterday, you're a good investor. If you sold yesterday, you have been watching Ben Armstrong's channel, and you shouldn't be. You shouldn't be. Then you're not a good investor. You're not a good investor. Ethereum had one of its largest liquidation events yesterday. That means that, if you're a bad investor, you were over leveraged yesterday. You got to decide, you got to make a decision and decide whether you are, what kind of investor are you? Are you retail paper spinach hands or are you actually a real investor? And the test is very, very, very simple. If yesterday you were buying, Chad. If yesterday you were doing nothing, you're probably a good investor. If you were selling yesterday, you really, really have to question what you're doing in this market and whether or not you're going to survive this. Because real investors actually buy dips. Real investors buy when everyone else is panicking. Real investors have conviction. Real investors look at a chart on a monthly candle and not on the short term. And if you look at the monthly, the uptrend is very, very, very much intact. Real investors understand that at most days, price remains below all-time high, but there comes a period when the all-time high changes more frequently than usual. This is what's called a bull run, a bull market, and these bull markets are about 200 or 300, 150 to 300 days, and the real part of the bull market is still coming up ahead. If you're a real investor, this is what you're seeing. If you're a real investor, this is what you're seeing. You're seeing that this cycle is playing out exactly the same as the last cycle. In the last cycle, we had a black swan. In the cycle before that, we had a black swan. In this cycle, we're getting a black swan. This is what you're seeing if you're a real investor. But you have to ask yourself a question. Are you a real investor? Are you seeing the fact that global liquidity is going up and temporarily Bitcoin is going down when every other time in history, global liquidity has been going up and down, Bitcoin has actually followed? So that's the first question that you have to ask yourself. Bad investors or paper hand retail spinach investors, I call them not real investors. Real investors are seeing it for what it is. Bad investors were the ones that sold yesterday. As I say, I'm not going to put you on the spot, but if you're one of the people in the chat that says, I was waiting for Bitcoin to go lower than 49,000, I was waiting for ETH to go lower than $2,122. That's like basically for free. That is like crazy to think that you still weren't buying when there, and you call yourself a real investor. On a more serious note, the first question you have to ask yourself is, are you a real investor or a paper hands, spinach, garbage investor? Number one. Number two, second big question that you have to ask yourself today. And be honest with yourself. Ask yourself this question today. Are you what did I call it? I actually wrote this down. I said, okay, well, let's just simplify it and say, honestly, are you a trader or are you an investor? Now, let me know in the chat what you think, whether you're a trader or an investor. Okay, so let me know in the chat whether you're a trader or an investor. And I'll show you what the difference is between a trader and an investor. Normally in the market, there's very little difference between traders and investors. In fact, traders trade more frequently. Investors invest multi-cycle, right? I tweeted this yesterday, and I think that this is probably the ultimate litmus test for whether you're a trader or an investor. And I said, look, if you were buying meme coins yesterday, you're doing it all wrong. You're not an investor. You're a trader. And I'll tell you what I mean by this. It's not that I don't like meme coins. I fucking love meme coins. I'm the biggest meme coin DJ in the whole world, right? It's not about whether or not I like meme coins, but it's about what you do in these extreme situations that defines whether you're a trader or whether you're an investor. If you were scooping up meme coins, congratulations, well done. You've had phenomenal bounces. Just look at the meme coin bounces, and this was earlier today. Just look at how big these meme coin bounces are in one day. Just look at Locken, Popcat, Mog. Mog was up 71.8%. When I looked at the banter bubbles earlier, Brett was actually up 35.67%. If you're a trader, this would excite you. If you are an investor, then you look at the meme coin trades and you look at the other trades and you say, hold on a second, even though meme coins have actually gone down a hell of a lot, I'm probably not going to get an opportunity to buy these good quality multi-cycle altcoins at the prices that we saw yesterday. And therefore, what you would have been doing is you weren't actually scooping up meme coins, but what you were saying is, look, it's all good and well to be playing meme coins if I'm a trader, short term. When I say trader, I buy now to sell within a day, a week, or a month. Then you're a trader. If you're here because you're investing in the technology multi-cycle, then you yesterday should have been looking at quality tokens and saying, if you've got $1,000 to deploy, do you want to deploy it into a meme coin, which is going to potentially go up the most, but where you have to time your exit correctly? Or was yesterday an unparalleled opportunity to actually be buying long-term things that are going to be here for multi-cycles? And to be honest, there's no right or wrong here. There's no right or wrong. Some people make more money because they're traders. But if you're a trader, then accept the fact that you're a trader and trade like a trader. Don't pretend that you're an investor, but then act like a trader. If yesterday you were buying meme coins and looking to buy meme coins, you're not an investor. You're probably a very good meme coin trader or a trader, but you're not an investor. If you were looking at quality yesterday and you were saying, here is an unbelievable opportunity for me to buy, let's just pick some of these things. Let's go to Rune. Okay, so yesterday was a great opportunity for you to buy Rune at $2.49. Now, if you took that trade, you're an unbelievable investor. If you bought MOG, you're a great trader, because I don't believe that most of the meme coins will be here next cycle, but I do believe that the good quality altcoins will actually be here in the next part of the cycle. And so 2 questions that you need to ask yourself. Number 1, are you a real investor at all, or are you just a paper spinach hands retail investor? You decide based on what you did yesterday. As I said, if you bought, Chad, if you held, good investor. If you sold, bad investor. You should be coming here way more often. Next question, are you a trader or are you an investor? And then you should be true to your execution style. If you're a trader, then look for the best short-term bounces. Then probably meme coins are amazing for you. Etc. If you are an investor, then you're going to start looking at quality. And if I looked at some tokens today, there was a lot of quality that rebounded really, really well. Look at 𝗥𝗓𝗏 up 33.2%. Let's look at let's look at it a bit bigger. Look at Ondo up 30%, Brett up 33%, Casper up 18%. Let's look at the last hour. It looks like it's starting to slightly come down in the last hour. So, as I said to you yesterday, obviously my portfolio lost a lot of cash. I'm not a trader, and I'm honest about it. I'm not a great trader. I mean, I can hold my own in any trading competition, as I think you've seen in previous trading competitions, but I'm not a trader. I am an investor, and I buy tokens for multi-cycle plays because I don't have the time to look at the market. And so when the market does what it did yesterday, the thing that I do is I like to scoop up good quality altcoins that I'm going to be holding in my portfolio for long periods of time and that are going to make it beyond one cycle. For me, meme coins are great, but very few meme coins are going to make it beyond one cycle. And I'll happily play meme coins all the time. But when the market gives me a juicy opportunity, then I'm going to grab that juicy opportunity by the balls, and I'm going to take the juicy opportunity. And that was yesterday. That's what yesterday was about. And so what I said to you yesterday is I lost a lot of money. The plan for me to make the money back is simply to DCA into a portfolio of good alts and use the opportunity. So for example, ETH. I didn't DCA into ETH. I DCA'd into ETH options. Okay, now day 1 was yesterday. So I started to DCA. Day 2, if you're DCAing, you'll pay 2,449, and you want to be DCAing for the next 14 days. So again, local top 209. Yesterday it got to 110. Today it's at 137. DCAing. 𝗬𝗓𝗡, same thing. Local top $50. Day 1, $16.40. Day 2, $20.22. Crazy to think that you can get these things at this prices. That's like that. Buying 𝗬𝗓𝗡 at $16.40 is even better value than buying this washing powder for $1.99. Okay, buying 𝗬𝗓𝗡 at $16.40 is the same as buying this washing powder for $1.99. Like, that's how good. That is how good these deals were yesterday. Look at Pendle. Pendle was at $7.52. Yesterday it was at $1.83. You should have DCA'd a little bit yesterday. And again, day 2. And we're going to DCA now for 14 days. And we're going to see whether this strategy of DCAing for 14 days actually works. ETH, Sol, 𝗬𝗓𝗡, Rune, Pendle for the real world asset play, Mantra for the real world asset play, Stacks for the Bitcoin play. Guys, Stacks was at $1.07 yesterday. $1.07. 𝗥𝗓𝗏, Phantom was 26 cents yesterday. 26 cents. Okay, I'm not saying it's over. I'm not saying that the correction. I mean, look at Ton. $4.69. I mean, if I would have come to you like a couple of weeks ago and said to you, listen, you can buy Telegram at $4.69, you would say, that is like buying this washing powder for 99 cents. You just can't get this washing powder for 99 cents. the quality of this washing powder, as you can see. Just look at what it does to the shirt. You see, buying ton at $4.69 is like buying 2 kilograms of washing powder for 99 cents of this washing powder. This is what, if you're a real investor, not a trader, you're buying these things to hold them for multi-cycle. And what you're seeing is that this opportunity probably won't present itself again. So that is the difference between a real investor and a paper hands investor and a trader and an investor. And guys, as I say, if you are a trader, that's fine. But then call yourself a trader and go and degen into the meme coins and trade and trade, but then you need to know when to exit. If you're an investor, the exit doesn't really matter because we're exiting next cycle or at the end of the cycle in like a year. And then again, if you're buying at $2.50, if you're buying at, like honestly, if you're buying Rune at $2.50 and it gets back to $11 or $12 or $13, it doesn't matter whether you bought at $2.50 or $3, makes no difference. Those are the two questions that you need to be asking yourself. Now, I don't know whether this thing's over or not. All I know is that for the next 2 weeks, I'm going to be DCAing every single day. We may get another leg down. In fact, as Arthur Hayes says, let's hope we get another leg down. If we get another leg down, then that is the trigger for the Fed to actually step in. The Fed ain't going to step in after 1 day of carnage. And I mean, it's not even carnage anymore today. Let's just quickly have a look at what's happening here on the... I mean, it's pretty green here today. It's pretty green here today, other than Apple, which is down 3%. Pretty green. Let's just quickly look at the QQQ. QQQ is the NASDAQ, for those of you who don't know what it is. It's the NASDAQ ETF. Let's quickly look at it. Okay, it's pretty much up. So today is the calm. Today's when everyone's waiting for direction. You got to decide whether you're an investor or a trader. You got to ask yourself a whole lot of serious questions. Okay, let's just a couple of other things. I mean, a show wouldn't be a show if we didn't talk politics, right? We've got to talk politics. Trump.
We did it, Joe. We did it,
Trump
Joe.
calls this, what does Trump call this? Trump calls this the 𝗕𝗬𝗕𝗓 crash. He called this the 𝗕𝗬𝗕𝗓 crash yesterday on his interview with Aiden Ross. I woke up to this morning. I'm sorry if I'm so sorry if I ruined your day, but the first thing that I opened up this morning, I woke up this morning, and this is what I saw.
You know, we have to stay woke. Like, everybody needs to be woke. And you can talk about if you're the wokest or woker, but just stay more woke than less woke. Yeah. You know.
I mean, look, on a serious note, I actually did wake up and I tweeted about it straight away. I was like, guys, I woke up this morning like with nightmares, from nightmares. And I was like in cold sweats. And like, why? Because I just thought that I woke up in cold sweats of nightmares of Kamala Harris in office for 4 years and having to listen to that for 4 years. I mean, yeah. Okay, let's not isolate our left-wing supporters. We mustn't isolate them. We should be nice to them. So a couple of things. Number one, if you are a trader but you don't have a trading account, I recommend the following. Let's quickly go through some hygiene here. Number one, if you want... okay, let's quickly look here. So, I mean, how's that thumbnail? I did not approve that thumbnail with me with blue eyes and shit like that. I mean, I don't look like that. I don't look like that. Anyway, we'll discuss that. That'll be an internal disciplinary hearing later. Okay, number one, there will be internal disciplinary hearings for the designer that made that. Anyway, number one. First of all, if you want my DCA list, it's here. If you were in front run, oh wait. I saw some people signed up for front runners yesterday. We let some of them in. We will let everybody else in today if you signed up. If you've signed up, please go and take this portfolio challenge. So there's a portfolio challenge that's happening in front runners at the moment. We do it every month for the people inside the Discord group, where we give away a cash prize and go and create your portfolio. It's simple. You just sign up for the system. You put in your portfolio today, and then at the end of the month, the winner gets the prize money. That's available if you want to join front runners. The next thing that I want you guys to do is so many things going on here. I want people to sign up to Sniper School because there's a new Sniper School which is actually launching. Can we put a Sniper School link in here at some stage today? And then, guys, lastly, if you are a good trader, then remember, there's investors and there's traders. If you are a good trader, go to BitFunded and start playing with other people's money. I've explained this to you guys before. Just go. Now is the best time to go and invest other people's money. If you don't want to invest your money, you go and take a challenge at BitFunded. This is a prop trading firm. It's bitfunded.com, by the way. You put $50, you get a portfolio of $5,000. Once you can prove that you can trade by getting 8% in the first challenge and 5% in the second challenge, then you're trading with $5,000 of their money. And you can go even up to $100,000. Now, I don't recommend you start off with $100,000, but if you do, you keep 90% of the profits and they keep 10% of the profits. Like, that's crazy shit. That's like crazy, crazy, crazy ass shit. Also, if you want to win a Cybertruck and you don't have an exchange account yet, I mean, get this. There are 39 days. So sign up and trade using a Bybit link, and you will be able to win the Cybertruck. So listen, guys, I think let's keep it short and sweet for today. Either you're woke or based, either you're a trader, either you're an investor or a spinach hands, not real investor, and either you're a trader or an investor. You're going to make some decisions, and based on the decisions, you better start executing. I will see you guys again tomorrow. Until then, trade well, my friends.